I'm with James Timpson, Courtier's Head of Asset Management and Fund Manager for the Multi-Asset Funds, to talk about what's been happening in the markets and the Courtier's funds throughout July. James, hi. Give us a lowdown.
Hi, Leo. So July was another positive month for markets, following on from the strong year that they've had so far. So the MSCI World Index, which tracks global developed equities, that puts on another 2% during the month, bringing its total return for the year to date to around 9%. So markets have been doing well despite that big spike in volatility that we saw at the start of April caused by all those tariff fears. But what's happened in the last couple of months is we've seen the US actually manage to make a deal with several countries, including Japan and the EU. So this has sort of helped to alleviate the fears that there's going to be this big escalating trade war. So markets have reacted really well to that. It's also been quite a strong earnings season, particularly in the US, with lots of companies posting stronger earnings than expected. So that's helped as well. In the UK, we've had some slightly underwhelming macroeconomic data. So inflation came in slightly hotter than expected. Unemployment is currently at a 4-year high. But despite this, the FTSE 100, which measures large cap stocks in the UK, that's continued to do really well, partly helped in the last month by the strength of the US dollar rebounding a bit. And actually in the last month, the FTSE 100 index did surpass the 9,000 mark for the first time. It reached another all-time high.
What does that mean, surpassed 9,000?
Well, the index level on its own isn't really that relevant. What the index is it shows a historic record of how the stocks have done over time. So the index level started at 1,000 back in the 1980s, and the fact that it's now at around 9,000 means that UK stocks, since the launch of the index, have increased in value about 9 times, because the index value is now 9 times higher than it was back then. So the number on its own doesn't really mean much. It's just a means of measuring, of tracking how the stocks underlying in the index are doing over time.
So making it meaningful, what does this mean to Courtier's investors?
It means it's been another good month for investors. Multi-asset funds all posting positive returns during the month. It has been a pretty good month. It's been a pretty good year, full stop, for equity markets in particular. But even in the last month, although most markets did well, there are always a couple of markets that tend to buck that trend. So Brazil and India actually posted negative returns last month. But we've got fairly minimal exposure to those, and it just highlights the importance all the time of having diversified portfolios, because you never know, which markets are going to do particularly well in one short given period of time.
Do you have your eyes on any of stocks in those markets, and then do the monthly figures and outcomes affect your decisions on whether there might be an interesting stock? Do you shy away into other areas?
So in the multi-asset funds, we have both broad exposure to markets. So we have exposure to the FTSE 100, for instance, the S&P 500, the Stock 600 index in Europe. So that gives us broad exposure to a mix of different markets from around the world. And then we also have more concentrated exposure to individual stocks within those markets. And these are stocks that are initially on our radar through a quant model that we've built.
Quant model?
Yes, it's a quantitative model which produces a short list of stocks based on value characteristics. We like value stocks, so we're looking for stocks which pay a high dividend and are relatively cheap to the amount of earnings that they generate each year. So we have a model which generates stocks based on those criteria for us. And as well as having to pass the quants model, each stock will also get looked at by an analyst as well. So it's passed both a quantitative check and a qualitative check.
Sure. So you were saying you've run through a quants model.
So we run this model several times during the month, and occasionally we will use the shortlist generated from that model to look at new ideas for stocks, possibly replacing some older ideas which have done well and are no longer looking as cheap as they did before. And it's essentially just an ongoing process.
Have there been any exciting findings in your research amongst the team over the last month?
I'd say in the last couple of months, we've actually had to reject a couple of stocks, because markets in general have done quite well. a lot of the stocks in the funds have become more expensive and are now starting to fail our value criteria. So just yesterday, in fact, we rejected Cisco Systems, which is a US tech company that's been held in the multi-asset funds and the global fund for a few years now. So that has just been rejected, and that will then prompt us to find a new stock from our model that could potentially replace it. So that'll be the next step for us.
And that's maintaining the value aspect of the funds.
Exactly, yes. We're always looking for a collection of stocks which represent good value and are not too expensive.
Great. James, thank you for the insight. Have you got any thoughts about the month ahead? Anything you've got your sights on right now?
I guess at the moment, tariffs are still a big talking point. On Friday, markets had a bit of a wobble because Trump unveiled a new selection of tariffs. So that's probably going to be dominating the headlines for the next few weeks. Otherwise, we shall have to see.
Again, we will see.
Yeah.
James, thanks for your time. Thanks for your insight. I look forward to catching up with you next month. Thank you.
Thanks, Leo.
If you have any questions, please do speak to your advisor or contact us through the website. Thank you.